Oil daily forecast, February 9th, FXEmpire.com. The oil markets, the light sweet crude more specifically, rose at one point during the Wednesday session to pierce the 100 level. But as you can see by the daily candle, we have given back most of those gains. And in fact, at the end of the session, we are printing a shooting star, which of course is a very bearish signal. We are printing the shooting star, interestingly enough, at the 100 level, which is where we suggested this pair or this market may run into trouble yesterday. You can see that the downward trend still continues with this little channel that we form, and now it does look like a bearish move is set up. Indeed, the 98 level, the breaking of that would be the breaking of the Wednesday lows, which would be classic technical analysis as far as shooting star, and that would run us down to about 96 before we ran into any serious issues. This is a preferred trade, and in fact, we aren't willing to go long the oil markets until we break 105. It just simply looks toppy. The inventory report that came out for the Wednesday session showed a build in the United States. In other words, they are adding supply of crude oil. So quite frankly, the demand is just not keeping up. With this in mind, and the fact that the Iranian situation, at least cooler heads are starting to prevail now, at least in the trading pits, they understand that the Iranians really aren't going to do anything at the risk of finding some type of humiliating response. The Iranians simply are just playing games, as many of the third world countries would do when ran by dictatorships. North Korea, Syria, two perfect examples. It appears that that's what's going on with Iran. They're just trying to posture a little bit and maybe get a few things they want, perhaps eventually to get the Europeans to drop the embargo. But as the world continues to trade, we understand that the light sweet crude supply is far outweighing the demand, and that is what they use in the United States the most. Cushing, Oklahoma is absolutely flooded with light sweet crude. Brent, however, is rising a little bit, and there is a little bit of a spread play there. But in general, the oil markets do look, or the oil market, I should say, that the light sweet crude is starting to look fairly weak. So we are looking for a shorting opportunity, and we get that below 98. 96 will be our first area of support, and then 94. 94 has to be held if the bullish momentum over the last 6 months wants to be kept going. If not, we will fall straight to 90, and then after 90, it's 85 and 80. Of course, we've got a long way to go before we get to that point, and we could just have a gradual grind lower. Either way, we are not willing to buy until we get above 105, so it is a sell-only market at this moment.